Hello from Trend Signal and welcome to our review of the news and events happening the week beginning the 13th of October. Last week was an incredibly volatile week. The markets were really dominated by global growth concerns with particular focus on the Eurozone, although global markets really took a major hit, really. Certainly equities did anyway. The FTSE, that was down 188 points. The S&P down 62 points. That's a big fall of 3%. The Dow Jones 465 points off, about 2.75%. But the big moves were reserved, as I said, for the Eurozone. The DAX, that shed 447 points, and that's just a shade over 4.85%. The Euro Stocks, the Eurostoxx 50, the Pan Eurozone index, that actually fell 168 points, and that was actually 5.25%. So you can see how volatile, how affected these markets are at the moment. We had some big moves last week with the FOMC minutes published on Wednesday, which tried to explain the Fed's position on interest rates and when they are likely to raise rates, and it certainly is not going to happen in the near future. I think the Fed also noted the effects of a strong dollar on inflation, the sort of downward pressure on inflation that you'd expect. So for now, I think the hawks are going to be sitting tight. But on Thursday last week, I think the markets were really badly affected by some very poor data out of Germany again. We've had some quite a string of bad data, really, from factory orders and industrial production last week. I mean, they then had some very bad export data where the data really missed by a country mile, really. As I said, coming on hot on the heels of the weak orders early on in the week. So I think economists started to talk about the possibility of Germany falling into recession, and I think the headline was enough of a catalyst. So we've had some incredibly volatile moves there. The dollar, well, that actually had a bit of a rebound. The euro had a bit of a rebound last week. In fact, it was its first weekly rise in 12 weeks, rising about just over a cent and a bit. Cable, euro sterling against the dollar, that rallied just over a cent, 0.7%. And gold, that rebounded sharply, up $31 or 2.6%. But unfortunately, Brent crude failed to make any moves despite the pullback in the dollar. I think the supply-demand equation there is overwhelming as the world demand falters to a certain extent. So let's have a look at what's happening this week and see what we should be focusing on. We've got our calendar from Forex Factory. Monday was a particularly quiet day, really, although the markets are still in quite a state of flux. But it's a bank holiday, or was a bank holiday on Monday, with the Canadian Thanksgiving Day and the Columbus Day in the US. Markets were open, but slightly reduced activity. But our first focus of attention this week is going to be on the CPI data in the UK. That's inflation data. Nothing at all to worry about there, although, if anything, the worry might be more on the downside than the upside. 1.4%. The inflation rate is going to dip from 1.5% the previous month. But the real focus, I think, on Tuesday will be the German ZEW economic sentiment indicator. This is a survey of institutional investors and analysts, and it's very much a leading indicator on the health of the German economy, and which is key to the Eurozone's health in general, really. And we're predicting quite a sharp pullback in that particular indicator from 6.9 to 0.2%. So that'll have quite an effect on all euro FX pairs, on Eurostoxx, DAX, Bund, and indeed other global indices. Actually, I think it really will have quite a bit of focus. We have Mario Draghi talking twice on Wednesday in Frankfurt. First of all, in the morning at 8 o'clock, and 7 o'clock in the evening. Does have the ability to move the markets, obviously. Whatever they say, or whatever these central bank presidents say, will have an effect. So that should be noted as a potential market mover. Wednesday, we also have, earlier on, we have our unemployment data here in the UK at 9:30. Expecting a further decline there to 34,200 is the expectation. Retail sales, normally quite important, but with other things going on, I'm not sure what attention it will attract. We're expecting a figure of plus 0.2% for the core data there. PPI, well, really no pressure at all on the markets there, unless that really is way out of line on the upside. I don't think we'll have any effect at all there. We have the first of the manufacturing indices in the US, the Empire State Manufacturing, that's the New York number, but the real data on that side is on Thursday at 3 o'clock, which is the Philadelphia data on manufacturing, and that is something that we should make a note of. We also have the regular weekly unemployment claims, and that's really it for Thursday. Friday we've got Janet Yellen, the chair of the Federal Reserve, speaking. That also has the ability to move the markets. And finally we have the University of Michigan consumer sentiment number on Friday, which remarkably the forecast number is still fairly robust at 84.3, but I suspect if the stock markets continue to shed points the way they have done last week, that the consumer in the States will not be quite as confident as perhaps those numbers suggest. Anyway, for now, equities certainly under a bit of pressure. The dollar in a bit of a state of flux, possibly following, well, certainly following the FOMC minutes last week, and certainly any dollar-based commodities, bar crude, on the rebound for now. Thanks very much for listening. Reconvene again at 8 o'clock on Thursday morning. Thanks very much. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.